I'm Bruce Lane from GTI Energy. We are developing our portfolio of ISR uranium projects in Wyoming. Our lead project is the Lo Herma project, and we're just about to start our scoping study on that project.
Bruce, love to see you. You got a bit of news out today, which you gave us a heads up on last time we spoke. So tell us more.
Yeah, Matt, we've been open about the fact that our drilling during this season has been targeting a resource update of in the region 7 to 8 million pounds at our Lo Herma project in Wyoming, the ISR project. So we've been able to overshoot that, which is great. We've ended up with 8.57 million pounds, which is a 50% increase in the resource size. And we've also lifted about 30% of that, or just over 30%, into indicator classification. So we were looking for that to be able to put us on a path for the scoping study. And that's, I guess, box ticked at this point. So we're heading into the scoping study process.
Okay, 50% is always good, but it's still small. Does this change anything?
Yeah, look, it might be small compared to Arrow, but it's significant in terms of Wyoming. We've got UR Energy developing Shirley Basin just down the road, and it's 8.8 million pounds. And then we've got Encore with their Gas Hills project, which is about 40 or 50 miles away. It's 8.1 million pounds according to the PEA for that project. So this is a developable size. It is only the starting point for the project. There's an exploration target on top of an additional 6 to 12 million pounds there, or 6 to 11 million pounds, sorry. So it gives us line of sight to be able to possibly even double the project. And that's certainly enough for a starting point for a satellite operation in Wyoming. So a central processing plant, which we think around that 8 to 10 million pound mark, will be justifiable under a scoping study. And then, of course, the satellite deposits can be a little bit smaller, but yeah, 6, 7, 8 million pounds is perfectly viable for a satellite project, as is evidenced by the Shirley Basin PEA, which is, the economics look very attractive on.
So are you saying that you don't need to do any more drilling, and this is just, you're going to focus entirely on the scoping study?
No, look, I mean, first stop is to do the scoping study as a baseline, and we'll run some scenarios off that baseline of resource that we've got. And then, there's clearly opportunity to continue to invest in some exploration and further resource development. And we'll have to do further hydrogeological work anyway. So it really just represents what is the minimum for that project based on this current resource. And then, there's opportunity to expand it with further investment in the short term. And it wouldn't take that long to build out the resource endowment based on what we've got.
Right, and so going, and how long does that process take? Let's start with that.
The scoping study. Well, look, we think we could get it out, maybe as early as the end of Q1, but certainly within the first half of next year. So we've already done quite a lot of the work. Obviously, the resource is the major component, but we've got the network underway. A bit more hydrogeological drilling has got to take place probably in January at this stage. And then you've got all the normal stuff around the economics of the build and the key input being the uranium price, the long-term uranium price.
Well, and also the ability to get it out of the ground. I'm sort of looking around, and people are a little bit skeptical. We're seeing Peninsula struggling technically to kind of move things forward. I mean, why should people be encouraged by the fact that it is possible?
We think a better comparison is to look down at UR Energy at Lost Creek. That's the same geological setting as our project. We're in the Wasatch and the Fort Union Formation, which are younger formations and less consolidated sands. Peninsula is down in the Cretaceous, which is an older formation. It's a marine sediment, tight sand environment, and that's why they've flipped it to being an acid leach process. And it's not that it's worse, it's just that it's a different set of complexities. They may be able to get higher recoveries. They've got a different set of concerns or challenges around getting the bore field flows and then getting the recoveries in the plant. They'll get there. I've a lot of confidence in Wayne from a technical point of view to get there. So it's a bit like Honeymoon in Australia. It's an acid process. They've got briny water underground. It's a different challenge. All we're trying to do is knock the pH up a couple of points and liberate the uranium out of the sandstones. So metallurgically, they're very simple by comparison. The projects, all of the other projects for the most part in Wyoming.
Right. Now, you've been sort of clear about your business plan, your strategy moving forward in previous conversations. Are you trying to just show this as a kind of standalone project and then kind of flip it out? Because you've got other assets in the portfolio, more pounds on the ground elsewhere. So how's the company moving forward?
Yeah, look, we've tried to focus on where we think we get our best bang for buck in the short term, and clearly that has been Lo Herma. So the key there is to establish a base of resource which we could start to build a central processing plant on, and we think Lo Herma is our obvious target just because of the scale and because of the speed we've been able to get it through the process to where we are now. We've got additional pounds in the Great Divide Basin, so our global resource in Wyoming is a little over 10 million pounds of inferred and indicated, and with an exploration target on top of that, the top end of which is an additional 20 million pounds, sort of 12 to 20 overall, including Lo Herma. So if you put them together and say, well, look, we've got 10 of inferred and indicated now, a potential extra 20 if you take the top end of that exploration target range, and it is only an exploration target range, but it gives you a sense of how big we could be. And for a satellite operation, if you look at what UEC does in Texas, hub and spoke, they've got the same thing based around Christensen Ranch and the Powder River, and their plans are to do the same thing down in the Great Divide. It's effectively how UR Energy is progressing. They've got Shirley Basin, they've got Lost Creek operating now. It's got double the capacity of the bore field at Lost Creek in the back end. So they'll bring the Shirley Basin resin beads 30 miles up the road to Lost Creek. And then they've also got Lost Soldier, which is, another 10 or 20 miles, probably 25 miles north of Lost Creek, and that's in their development pipeline. They're looking at that at the moment. So, that would be the third leg of their satellite project. So that's the way these things develop. They don't tend to develop in one big bang with 50 or 100 million pounds. They tend to be, a low capital entry into the uranium processing field, relatively short time to get through to development and processing. The mines, the processing plants and mines themselves don't take that long to build in the context of other projects or take that much capital. And that's really the proposition. The risk is managed for the way through. And they, like any other mine, they don't always ramp quite as fast as you want them to. But they definitely get there. And there's been, if you look at Cameco's produced over 20 million pounds at Smith Ranch Highland, which is 10 miles to our east at Lo Herma. So, we know it can be done. There's no question about that. It's just, we just get to the point where we can justify the investment.
Well, you've mentioned a few names actually in Wyoming. We've seen UEC's acquisition of Rio Tinto's assets in Wyoming for $175 million. We've got Cameco sitting with, I think it's probably double, about $300 million worth of assets in Wyoming, not doing too much at the moment, but nevertheless they're there. Energy Fuels also with assets in Wyoming. There's some big names with assets in Wyoming. Does that change the message from you as to the potential of Wyoming, working in Wyoming, and maybe how people should value ISR projects in Wyoming?
Yeah, look, I think that's a very strong indication of the fact that you can execute in Wyoming. So, if there's an area, we've got 7 permitted facilities around us, it's pretty clear that you can execute a uranium project in Wyoming, as long as the price is there. And, we believe the price is there or thereabouts now. We'd, of course, enjoy it being higher, as everybody would. But the PEA that Shirley Basin put together is based on an average price $82 to $86 over the life of the project. So we think that's fairly conservative and achievable. So they're the first things. But I think the other thing is that these are US pounds. So, we don't have to put them on a ship and send them to the other side of the world. We just got to get them to Metropolis in Illinois, to Converdine. And that happens kind of almost every day of the week. It's not a big challenge. So, and apart from the fact that US pounds are obviously looking more and more valuable as the US tries to backfill that 50 million pound annual gap that it's got, the Russians having just cut them off from 25% of their enrichment supply. So, I think there's a couple of key factors there. One is obviously Wyoming is a great place to execute. We can see that from what's happening around us. These plants are all coming back to life. UEC's come back to life. UR Energy's back in business. Energy Fuels looking at starting next year. Obviously, Peninsula, we hope will get up this year. So there's a lot happening there, and then combine that with the sort of supply deficit in the US and the geopolitical issues, and we don't think there's a better place to be operating, frankly. And we think that the pounds are probably more valuable than pounds in other parts of the world. I mean, that's, I guess, to be borne out. But you can see what happened with NextGen. A consortium of 5 US utilities have gone and committed to buying pounds for a project that hasn't turned a shovel yet. And I'll let you speculate on when they'll be delivering those pounds, but they might be buying them in the spot market to satisfy those contracts.
Yeah, there's no sense of timing on that for sure. The conversation for another day. One thing that we have sort of seen happen is, I'm sorry to keep bringing it back to Peninsula. Like I say, Wayne's a good guy, technically very, very, very confident, but sometimes things are in your control, and a lot of times they're not. How do you, as a small junior, navigate the way forward? We saw Peninsula have their, UEC remove the processing capability for them, and they had to sort of set them back a year, having to come up with a solution to kind of control that part of their process themselves. For you, can you be clear about what your strategy is? So if investors come in and go, right, okay, I know what these guys are going to do. They're going to flip this thing out for someone else, the project's out for someone else, sell the company. M&A is absolutely the strategy. Or in the environment that you see, have you got a bit more ambition and think, well, we can take this down the line a little bit further? How do you play this?
Yeah, look, I think, in all seriousness, the answer is both. And for us at this point in time, our choices are simple. We invest in, the asset development side of it, getting through the scoping study, using that scoping study to illustrate the options for commercialization. And as we get through that process and the project matures and starts to de-risk, then clearly it becomes more attractive to our neighbours as an asset. And if the conditions are right and the deal is right and it's a good return for our shareholders, then all of those things start to become a possibility. In the very near term, we control our destiny by getting a good outcome with the project. And, that's our clear focus. Now, there are other conversations we've had and can have and will have about those sort of relationships. I mean, clearly resin processing is not off the table, despite the fact that, we've seen how it can go wrong. So it's not off the table, but it all depends on what the arrangement is. We know that the likes of, some of the Japanese trading houses are now starting to look downstream at getting back into investing at the project level, whereas they kind of withdrawn from that post-Fukushima. And that's a pretty strong indication that, pounds above ground are getting very hard to find. And even pounds underground with existing developers and existing miners are getting very hard to find. Hence, NextGen being able to contract those pounds all that way forward. So, we think that the best thing to do is to generate those options, and then it'll become clearer, we think, in the first half of next year, to what extent we can turn those options into real outcomes. And it could very well be a partnership or some sort of transaction with somebody in the neighbourhood.
Okay, and if I look at the last cycle, which we're involved in fact, we offered $100 million to Peninsula just before Fukushima, and I'm talking literally 2 weeks before Fukushima. And that was very much a pounds on the ground game back then. That's how companies were valued. What we're seeing at the moment is that. So what we've seen in the last 2-3 years is obviously M&A was the driver of valuations. Therefore, pounds on the ground was still the mechanism. We're moving into a phase now where the U.S. government, for instance, where you guys operate, they are making money available for the enrichment guys, so for downstream. They're trying to get the sector moving again. You miners have not been the beneficiary of much inflow of money. Lots of conversation, lots of narrative, but that doesn't kind of help you much. How do you move towards showing that this it's not a pound? You can it's beyond pounds of the ground, and you can actually get it out of the ground soon, because those people in other metals seem to be the beneficiaries of quite a lively market at the moment, or metal price market at the moment. Do you think that the winners of this game will be those that can actually show a route to production, or again, how do you play this? Because there's a lot of people in your position talking a good game. We now need to sort of, show me, don't tell me.
Yeah, look, I mean, I'd probably challenge you a bit on that last statement, because there aren't a lot of people in our position. All of the guys who are in the early stage in the cycle and around us in Wyoming don't have any resources. They don't have any pounds in the ground. Then it's a jump up to the guys who are permitted and have processing facilities, and who are either delivering pounds now or will be in the short term. So there's a real gap between those guys and the explorers. And if you have a look at the valuations, then it's a little bit hard to reconcile. I mean, I can see explorers in Australia come out with a decent drill hit, and they've got a $12 million market cap, and really nothing at this stage apart from some exploration results that aren't even an exploration target. They have a higher valuation. We've got 10 million pounds of inferred and indicated, and our valuation is less than 10 million bucks Aussie. And pounds were trading for a range up to $5 or $6 US per pound during that last cycle, when uranium was only 65 bucks a pound. So it doesn't make sense to me. There's a mismatch. The market's not seeing it, not reading it. Is it because I'm speaking Chinese or telling the wrong story? I don't know. But, if you look at it on a fundamentals basis, and there is really, it's challenging because there aren't many peer transactions to look at. The only recent peer transaction is one that involved a conventional asset in New Mexico, and that carries a valuation well in excess of where we are. So, we think we've got a movement to come, and we think that the catalyst is probably, Trump needs to get inaugurated and get his executive orders out on day one, and the nuclear power producers, the utilities need to feel confident that they're not going to get the rug pulled from under them through a removal of the IRA and those tax credits and investment credits. And then, look, the utilities as well, they've had a heck of a lot to deal with over the last year or so. And the biggest one, the most recent one, is losing 25% of their enrichment supply. That only happened a couple of weeks ago. So they're not the sort of people who run around with their hair on fire in a panic. I think it's taking a while for all of that to bed down within that group. They're definitely looking for pounds. I don't know, at what this point you might have more insight into the reality of that. But, we're pretty sure they're out there talking to people. There just aren't that many people who can sign a contract for pounds at the moment. So, on the supply side.
No, like you say, that and these sort of letters of intent and MOU from the utilities are meaningless, because none of them are going to be binding until you guys show you can get it out of the ground. The other way that companies like you get relevant is scale. And it seems to me there's quite a few uranium juniors who perhaps could do with maybe cuddling up and getting together to maybe deliver against the look, you made a good case and say, look, if we're £8 million, there's other examples of companies getting into production, or the on-course GTI Energies of this. Well, so you're at a good place. But if the perception, which unfortunately sometimes is reality, is to be believed, you're going to need to say, well, show very quickly you've got the 30, the 40, the 50 million, 100 million pounds in the crowd. Coming together with other people in your similar position might be the way to do that. Are you in conversations with other groups about that, the potential of doing that?
Yeah, look, it's safe to say that concept of consolidation to, grow the entities so that they're more attractive to larger pools of capital, and you can kind of consolidate your capabilities around projects and those sort of things. There's a lot of good solid rationale for that, um, and yeah, there are conversations, and there have been conversations. I think where we've been kind of stuck, or is that valuations have been pretty modest, and quite a few guys have raised capital. Quite a few companies have raised capital in excess of where they're trading now. And certainly not at a premium in a lot of cases. So it does make it hard when you put companies together to get the right valuation outcome for shareholders. So that's not something we can just dismiss. That's got to get worked out somehow, so that everybody kind of gets the right outcome. So look, I think there is a lot of logic in it. I think there's a real possibility of doing something in the future, but there's a lot of things that need to be sorted out before we could get to that point.
Okay, and I hear you. Like it's hard to tell in this market. As you say, you can't quite figure out why the valuations are where they are. Certainly in your case, given you actually got resource. But sometimes two $10 million companies coming together creates one $10 million company. Doesn't always hasn't
That's
really
right.
worked out recently. So
Yeah.
it's not something you want to rush into on that basis. But look, if the right opportunity comes, I guess you'll talk about it. Well, look, Bruce, look. I guess scoping study next is the way forward, showing a route to actually be an Encore, be a UR Energy in Wyoming. But as it stands, Wyoming's starting to hot up, and hopefully new eyes looking into it as well. So appreciate your time today. Thank you.
Yeah, thanks, Matt. It's good to chat again, and hopefully we'll pick you up again in the new year, and revisit things. Maybe uranium price will have done something by then. Hopefully Trump survives his inauguration, and there's a flush of optimism around everything at that point.